Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn. We've adjusted our show until we get back in the studio. I'm joined today by Bob Icino. Welcome, Bob.
Good to talk to you again, Jeff.
Well, Bob, volatility persists in the marketplace, but the trajectory for U.S. equities seemingly is higher. What's your focus this week?
Well, I like that you brought that up. I mean, looking at volatility, really struggling to get below 30. Normally, historically, typically, we have volatility a lot lower than this in a bull market. And I think that just represents the possibility of big moves and the velocity of the moves we've seen.
No, it's a great point. We talk about opportunity in the wake of those moves. But let's discuss two topics today: precious metals and the NASDAQ 100. So if we look at gold and silver, Bob, both of them are making moves higher this week. So I guess the question the viewers want to really understand is, will this move potentially break us out of the respective 2020 ranges?
I think they will. I know that's a very popular thing to be long precious metals right now, but I think those ranges are going to blow out to the upside. Part of the reason is the devaluing of the dollar by the central bank, but the devaluing of currencies in general globally. As we get more and more stimulus, it should typically be bullish for precious metals.
Well, that's a great point. I guess one of the questions I have a follow up here is that why didn't we see gold move higher? We've seen the U.S. dollar weaken in the last couple of weeks, but now all of a sudden we're seeing a little bit of buying come into it. Why didn't it happen a couple of weeks ago, Bob?
Well, I think a lot of the correlations temporarily broke down as we worry about the downside to equities. But the more we realize that central banks are committed, the more you see that money going to most assets, and gold and silver fall in that category.
No, that makes a lot of sense, and that's why it's great to have access to the gold futures as well as the silver futures nearly 24 hours a day by the CME futures contracts. But let's switch gears real quickly and hop into technology. It's amazing to see the technology sector continue to attract assets. The Nasdaq 100, yet another record today. So as it pushes higher, we had another record close yesterday. I guess my question is it all about just a handful of stocks, or will the Nasdaq 100 continue to provide broader leadership in this rally back from March 23rd?
Well, it's my belief that tech has to rally when things aren't as good, and tech will rally when things are good. So tech has definitely got a leadership role. It would have to be a pretty big global recession, I think, for tech to weaken substantially.
That's right, and it's interesting to see. The Nasdaq 100 continues to defy a lot of the reopenings of the economies. But how connected is it to in the wake of COVID-19 to see some of these technology names like an Amazon, like an Apple, really accelerating in the wake of COVID-19? Is this going to be a theme that we'll see play out in 2020, or is this more of a Q2 story, Bob?
I think it's very similar to the disaster recovery story that we saw after 9/11. Things that companies were planning on doing anyway are going to be accelerated. You take something like DocuSign, for example. Signing documents, legal documents, used to take a lot longer, but it wasn't necessarily a chore for people. But now, as people have to practice social distancing to be safe, it's just safer to do it electronically.
No, that's a great point, Bob. Well, hey, thanks as always. We also want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.